Hi there, welcome to video number 18 of module 2. This is going to be video number 2 of module 2. Alright, let's go back to our navigator area, and while open the indicators list, navigate to the accelerator oscillator. Make sure that the thickness on the right hand side is select to the second one if you haven't done that already, and just leave the colors as they are and click on OK. Alright, what we see here is the accelerator oscillator now being applied to the bottom part of the window. Okay, and you will see some figures at the top, one at the bottom here, and then one in the middle, 0.00. Now as I'm scrolling over it, it's bringing up a caption that's saying vertical scale, alright, or the 00 line as it's sometimes known as. Okay, so the rule of thumb is the basic signals for a buy signal is when you see it go from green, where I've got my cursor over, when it goes from green and then then it goes above the 00 line and it goes green again, on the finish of this bar you will go long, and on the end of this bar, when it starts to go red, you close it. Alright, now long means if you think that the currency prices is going to increase. Essentially what you're doing is that you'll be buying this particular currency pair, which is the euro versus the USD, and we're on the 30-minute time frame. Alright, so let's move on and find another buy signal. This is based on what the public say. When you see that when the green goes from green to here and then it starts to create a bar above the 00 line, above the vertical scale, it's a buy trade. And when the green bar turns red for the first time, then you need to close that trade. Alright, now short trade is basically the opposite. When you see the red one here, what you're looking for is for the next red bar to be under the 00 line, and then you go short. And then as the red bar starts to turn green, you close that short trade. Alright, now this is okay to a degree, but you really need to filter these strategies to the point where you can take out any possible losses. And let's give you an example. Okay, I've just got my crosshair tool out and I'm going to line up where the green bar is, and this is where it's essentially going to say that you're going to have to get in around about here. So as soon as it goes green and this bar is green, you want to go basically long around about there. Now you're going to have to take some of these strategies with a little bit of pinch of salt, because not all strategies are 100% perfect, but when you use proper money management and risk management, you should be okay. Alright, so when the way that you should really be doing it is based on the way the public say. Here is the green bar, and if you take a look at the green bar here, this is probably where you would get in, right at the top. Okay, but unfortunately this doesn't have much volume in the trade, and eventually as soon as you go long, it starts to come back down again, and this here will be your warning to get out. So you probably would have lost about 20 pips on that trade. Okay, now if we take a look at another one, if we get in on this red bar here based on what the public say, which will be down here towards the end of the candle, we'll get in on this bar and we'll get out on this green bar, which will be here, and it'll be around about there. So that's like 6 pips. Alright, and that's not really good. Alright, so how do we really get money out of this? Well, there are two ways. First is to find where these possible entries come in that don't really produce many pips and find a way to actually maximize it. And the second way is to change different time frames. Alright, now I'm going to show you my way of doing it. Okay, this is how I filter out the possible losses that can occur. Now what you need to be looking out for is this green bar needs to be above the 0, 0 line, but on the same token, the bar that you're actually hovering over, this candle here, is red. Alright, you can just see it where my cursor here is. If I move my cursor out of the way, you'll see a red candle. Alright, you now can see that red candle right there. So that is not a buy trade. Alright, what we're looking for, we're looking to have green bars, okay, and then having a green candle as well in the same line. Alright, now that is one way that you can go ahead and start performing the trades my way, but you will also notice that in this particular instance here, it was the same as the way that the public would do it as well. When you get into here, it would only go up so many pips and it starts to come back down again when this starts to change color. So the only other way to get around this is because you're going to have possibly more losses than gains with this particular time frame. So what we would need to do is go up to a higher time frame. Okay, and then we'll start analyzing the market again and take a look and see basically where we can work out where we can go in and get some money out of this particular trade on a higher time frame chart. Alright, so here's a green one right there, and if we got in there and got out there, that would turn out to be a loss as well. Alright, so let's have a look at some others. Alright, what I tend to look for, the best way is that the first green color should really match up the same with the candle as well. So here is a red one here, and we need to see a red one there. So that's true. So we go short on the next candle, and we come out on this green candle right here, which will be around about there for 59 pips. Alright, let's take a look at this green bar, and this green bar actually hovers over a red candle, so that wouldn't be a trade. Let's take a look at this green bar. This green bar sits on a red bar, on a red candle, so that's going to be no good. So take a look at this next red bar under the 0, 0 line, and it does sit on a red candle, so that will be good to go short on. Alright, and then we can get out on this green bar right here, which will be around about there. So we would have only made about 17 pips. It's not a lot, but some strategies, some indicators give you more pip gains than others. Alright, but if we switch to the 4-hour time frame, we should be able to gain a little bit more out of this trade, out of this particular currency, out of this currency pair. Alright, so we're looking for the same rule again. Now, sometimes you have to modify your strategy when you go up to a higher time frame. Like for instance, our rule on the 1 hour time frame was to make sure that the green bar, the first green bar above the vertical scale, matches the candle right above it. Alright, if it's the same color, then great. If it's not, then move away. Alright, and also it should be the first green candle. Let's take you back to the 1 hour time frame to give you another example. Like it needs to be the first green red candle. So here for the short trade, here is your red bar, and the first candle above it is a red one. The one before it was a green. Alright, now if this one was a red, then this one would not be a viable trade. It needs to be bang on perfect. So like this one's a green and this one's a red, so that's no good. Let's take a look at this one. This one's green for a buy trade. Alright, but this one's red. Alright, so that's no good. Okay, this one's green and this one's green, so that's good. The one before it is red, so that's okay. But if the one before it was green, then I would not choose this trade. Alright, so basically when you get into a higher time frame chart for the 4 hour, we can modify our strategy a little bit, because essentially what we're looking for in the 1 hour time frame, we want to see the previous candle be red, and we want to see the current candle that we're hovering over to be the same color as the bar that's above the 0, 0 line on the vertical scale for a buy trade. Alright, but with the 4 hour time frames, you can be a little bit more lenient, and you don't necessarily have to wait, or don't have to wait for the pre-requirement of the previous candle to be the opposite color. It can be the same color, because with the 4-hour time frame, it's going to move a lot slower, but it's going to move in a greater moves of, like, 50, 60, 100, 200 pips. All right, so let's give you examples from left to right. Okay, so here is a red bar, and when we hover over that red oscillator bar, it actually gives us a green candle. So that's no good. We don't need that. All right. Now again, we look at this one here. Now this could actually possibly turn into a loss. Now, with that being said, when you start coming out with your strategies and you say, okay, well, here's a buy trade based on what Loz says, and then go long, but then the next bar has come out to be a red one. So how do we minimize the particular kind of losses that can occur? Well, the best way is to use support and resistance levels. Alright, I've just got my horizontal line tool out from the top here, and I've put in my, my horizontal levels for my resistance, and I can put some in for my support. Alright, now if you don't see any signals, if you do see any buy signals, but the buy signal happens right at the top of a resistance, which is right here, and basically a resistance is an area where the majority of the traders out there prefer that the price do not go up any higher. Okay, and a support is basically where they're happy for a level to come down to, but they don't want it to come down any lower, so therefore this comes as a is referred to as a support. Alright, so this is another thing that you need to pay attention to. I'm actually throwing this all around a little bit, but as we move into the other indicators, I will start doing things like the way I'm showing you right now, which is really the first step that you should be doing after you apply your indicator, is to apply support and resistance levels. Okay, and we'll go through those in this module too, and then hopefully by a few videos or so, it will become a little bit more easier and apparent of what it is that I'm doing without really explaining it in great detail. Alright, so here we are with our setup now. So we've just looked at it. Now we're on the 4-hour time frame. Now I honestly believe that the 4-hour time frame will be your best bet to learn and study from. The lowest time frame I would suggest would probably be the 1-hour time frame. But if you just want to get in and do some trades and you're not really bothered whether you make a loss or whether you make a gain, which is still okay, go ahead and use the 15-minute and the 30-minute time frame just to get used to opening the trade, alright, and seeing what happens, okay, and if it gets into profit, close it if you want, and just keep doing that for a little while, or you can set take profits on it, and we'll show you that in a little bit. Alright, so now I've got all my setup up now, and I'm working off the 4-hour time frame, and the first thing I'm going to be looking for is, let's say, like a buy signal. Now, a buy signal is when the AC shows a green bar above the 00 line. The next thing I'm looking for is to have this line here, this candle, to actually say the same color. So here it is, it's the same color, so that's great. So on the next bar, I'm going to go in, and I'm going to go in long. Alright, and long means buy. Okay, now if I just get my screen drawer pen out for a moment and let's just show you how it is that we go about doing that. Let's see if I can minimize that. Okay, so we got in on this bar here, and we go long on this candle right there. Okay, the next thing we need to do is we need to get our support and resistance lines out to find and work out where our target's going to be. Alright, so we take a look. This is the resistance level. Okay, and this is an area in the market where the market has turned around and says, hey, we don't want to go up any higher than this. We prefer the prices to come down. Alright, and as it's come down, the bears have come in, and says, no, we don't want you to go any lower, go up higher, kind of thing. Alright, so eventually the market's gone up higher, and now it's respected the previous resistance area. Alright, and then the market suddenly dropped. Okay, now when the market drops at this particular area, you can then do like a 61.8% more down around about here on a FIBO extension. We'll get into FIBO extensions a little bit later. Alright, but here we can see that our target did actually get hit. Alright, so let's take that screen drawer pen off. So my target for my TP is going to be around about there. I wouldn't put it right at the top of the wick. The best places to put your TPs or your projected take profit targets will be to really just get it above the body. Alright, now the body, if you don't know what a body looks like on a candle, here is the what's been filled in is the body. Alright, and when you see a little line at the top and sometimes you see a little line at the bottom, those are referred to as wicks. Okay, so you really want to get it just to the top of the body. Alright, and you'll have more success hitting your take profit targets when you do it like that. So let's take a look at the pip gain that we could have possibly gained from this. So we've been on this bar here, and we would have got out for 218 pips in 13 times 4, which is 40, in 52 hours. Alright, so 52 hours is basically 2.5 days. Alright, that is how long I typically have a trade open for. Alright, if you was to trade smaller time frames or smaller bursts, like leaving your trade open for 10 minutes, 20 minutes, 30 minutes or whatever, that's all fair and well, but you might get yourself burnt out. Now, the purpose of you joining the Forex Boss training course is so that you can learn the right way and not start developing habits in an early session. Alright, so if you do it my way and actually spend 2 to 3 days just learning this particular strategy before you move on to the next indicator, you would do a lot better than you would if you went back to like the 15-minute or the 30-minute time frame and work off just solely off of those time frames and no other time frames. Alright, you would do a lot worse that way. So if you, the best bet would just be to work off the 4-hour time frames. In most part, I would probably say the 4-hour and the daily time frames will be the best time frames throughout this whole entire course. Alright, but that's just for me to try and put the safety element out there for you. Alright, but you should be doing okay when you get into the next modules ahead. Alright, so let's see if we can find out some more areas in the market as well for a sell signal. Alright, so here is a sell section right here. And we look right at the top and we can see now that this bar is green. Alright, now we don't know what's going to happen in the future. We don't know if it's going to drop, we don't know if it's going to go up higher. Alright, we're just basing these signals through patterns that emerge all the time. Alright, it's why I love the Forex. There's so many phenomenons that appear out of the blue that you can profit from. So we would ignore that regardless if it comes down or not. Alright, here is another a green bar right here, and here we can see there's another green candle, grey. That is like element of number 1 of the signal. Now we need to look for the second part of the signal, and that is the signal right in the path of a resistance area? Now you may recall me saying that this section here was the resistance. Oops, let's get a different color pen out. You may heard me saying that this line that I drew before was the resistance and this one was the support. Well, when the currency prices start to move under the support, this then turns into a resistance. Alright, and then the next line below it turns into a support. Alright, and you can see where the market's bounced off. But when we was looking at this particular signal, the signal was right on a resistance level, so we would ignore that particular trade. Alright, so if you actually went long on this trade and the market started to come back down and you started to make a loss and you couldn't understand why, the possible reason is that you didn't take into account these support and resistance levels that we drew in previously. Alright, I hope that makes sense. Okay, let's come down off of that. Alright, okay, let's take a look at some other instances, shall we? Here is a sell signal opportunity right here. We can see the red bar below the 0-0 line. And then the next thing we need to look at is the candle red. Yes, it is. Alright, so what's the next thing that we should look at? Well, the next thing we should look at is there an immediate support to prevent this trade from going down any lower? Let's take a look. Well, no, there's quite a big distance from here down to here to the next support. So okay, we can go ahead and take this trade on. So we get in on the new bar, get in right here, and we take it down to our support level. Now if you take a look at our support level, it's sitting right on the bottom of a wick. Now I normally tend to put my support levels on the top and bottoms of wicks, but I normally tend to put my take profit targets just to the top of the body if it's a long trade, or just to the bottom of the body if it's a short trade. Alright, so I'm going to move this up a little bit to kind of give a mean average of some bodies right there. Okay, that's what I would basically do. Alright, now let's take a look at where we would have got in on. Would have been, let's take a look on this bar here, so we would have got in there, and we would have hit our TP in 44 hours for 254 pips. Now let's take a look at this, ladies and gentlemen. Alright, from here to there, we would have made 216 pips in like 52 hours, and then there was a gap from where we closed out, which was up here. Then there was a gap from there all the way to here, 25 times 4, so that's 100 hours. So in 4 days or so, okay, 4.5 days, we had to wait for another signal. Now you might think, well, 4.5 days is a very long time to wait, but let me see if I can put it in some sense that you would probably appreciate. Money. If we were to do this at $1 per pip, and I'm not going to say $10 per pip, because I don't want you to get overexcited and that you're going to start making foolish trades because you can make so much money in a short period of time. Let's do this realistically. All right, $1 a pip, a $10,000 account. All right, at 100 to 1 leverage. Your risking is a little bit more than what you should really be risking on like a one lot. So you should bring it down to 0.1 lot. Alright, and that would, rather than you being charged $1,229 or whatever, you're going to be charged a lot less than that. It's going to be actually 10%. So you're going to be charged around about $100 odd bucks. So you're only going to be risking $100 odd dollars, which would be about 1.2%, which is perfect. Alright, you don't want to have a trade that costs like $5,000 to open up and your balance is only 10 grand. That's using 50%. Alright, even though if your equity only shows that your pip spread is the only difference between your real balance. Alright, so that's the way I look at it. If you're you trade into high volume, then you need to come down and make sure that you're only trading small volumes. Now work this out on $1 per pip. As this went up, it was $216. Right? Okay, this happened in about 2 days, but that's really not a problem. All right. And then we waited 4 days to get another signal to come in. All right, and we got a signal right here, and we took it down to here for like another 265 pips. Alright, so over a period of 1 week, we made about $500. Alright, now that's pretty good money, no matter how anyone looks at it. Alright, that will probably cover most people's rent in Vegas. Alright, because it's pretty cheap over here for the rent. Alright, but then let's move on. Alright, we're into our 2nd week, so we're going on and we see another signal that comes here, and we go, right, okay, the next one is a green candle. Great, that's what we're looking for. The next thing we're looking for is this signal right in the path of a resistance line. No, it's not. So great, we can go long on this. Alright, so we go long on the next bar, and we take it up to our previous resistance lines. Alright, and here it is there for 327 pips. Alright, and that got hit in 13 times 4 hours in 52 hours. So in 2.5 days, after waiting 4 days, we got another 320 bucks. Alright, let's look for another signal. As we go along, we're looking for a red bar to fall under. Here is a green bar. Okay, we can't do that. Now look at this. It's a green bar, so we didn't do it, and it went back up the other way. So that's great. We made the right choice by staying out. Here is another red bar, but it actually hovers over a green bar, so that's a no trade. We keep moving on, and here is one right here. We go above it, and it's a red bar. It's a different color, so we ignore it. We keep going, and we keep going, and we see a red bar right here. Now this is going to be a bit tricky, ladies and gents. Alright, so when you get into this one right here, this is a red bar and it follows what we're looking for, but also there's a bit of support here. Alright, and you can see like where the market has tried to penetrate through, but then the red candle came back down and pushed it a little bit lower, and then the bulls came back in and pushed it above the minor resistance there, and then it tried to attempt to go towards the next resistance, and then it failed. But where we see that signal, where we would have actually got in would have been right here on the open bar, and down to that particular support line is actually 42 pips. Now you need to say to yourself, is this enough for you to walk away from in profit, or do you really want to risk gaining 40 pips for a possible turnaround where it could go back the other way? Now if you take a look at where some of these signals appeared, there was a huge gap. Like if you take a look at these grids here, there's like 1, 2, 3, 4, well, 3.5 grids there of no, there's no traffic in between. There's nothing to stop it from coming down. But if you take a look over here where we would have got in on this trade, we want to look and see how much traffic's gone behind it. Alright, and there's quite a lot of congestion in there. So for me personally, there's too much of a risk. Alright, I want to get into something where I have a nice signal here, where if we move on a little bit further, alright, we can see another red signal here, like for a sell signal. It goes over a red candle, but it's right on that support line, so we don't want to risk that. Okay, so now we go look for a buy trade. Here is a little green candle, a green bar above the 00 line. Place our cursor over it, it's actually on a green candle. Then we can go long. We can target this area as our take profit. Alright, and then we can get like 94 pips there. So out of a period of 1 month, we have gained around about $600 to $750 just trading at $1 per pip. Alright, now if you did that at $10 per pip, which I wouldn't recommend, that would have worked out to around about $7,000. Alright, so it would have made 70% in 1 month. Alright, and you got to be very sure that you don't get too greedy and get too over emotional when you see figures like that, and still come back and get you calm, and then go on and resume on from where you left off. Alright, so that's basically how you go ahead and do the trades for the accelerator oscillator my way. Alright, and it's how I filter out losses. Alright, when we get into the later modules, you're going to see some live trades. Now, if there's some skepticism out there, we're saying, well, hey, Loz, it's all fair and well you're showing us these strategies and what have you, but look, the market's not open right now, it's dead, and you're not showing us any live trades. So how do I know that this really works? Well, one way is for you to actually go ahead and perform it, and the second way is to actually watch me over my shoulder as I show you in module 6 live trades. Okay, and every single indicator that I actually show you here, and if I have a strategy for it, I'm going to perform a live trade on it. Alright, so I hope you're going to look forward to that kind of section in the near future. So until then, I know this is a long video, so what I'm going to do is cut this video into 2. Alright, and then I will see you very soon in the next video. Alright, bye for now.